Welcome back to the Money and Wealth Show. I'm Sterling Fox in conversation with Dr. Marc Faber, who is visiting us here in British Columbia from his home in Thailand. Marc, you talked about gold before the break.
Yes.
I'd like to pursue that a little bit because you were talking about a price drop-off to a certain level, which would cause the Chinese to perhaps start to sell.
Well, basically, I'm optimistic that over time the price of gold will go up in currency terms. You know, I could also argue the price of gold stays the same. It's just that paper money depreciates against the price of gold. So, whereas 10 years ago you had to pay $250 to buy an ounce of gold,
right,
now you have to pay close to $1,200. So there's a loss of purchasing power of money, a symptom of inflation. And I think that over time, paper money will lose even more value, and so that gold is a store of value. But can it fluctuate? Of course, we live in a very volatile world, and I just want to tell people who are interested in gold, in theory, it's possible that the price of gold drops to $950, and if the Robert Prechter scenario of Dow Jones below 1,000 comes about, which I don't believe, but just in case it comes about, then gold, I suppose, will be maybe only at $500. Maybe it will have gone up, who knows, but I would rather imagine that in a huge debt contraction, that everything will be down, and some things will be down to zero, like paper cash in US dollars, government bonds, they'll be worthless. Shares will have some value, and gold will have some value.
Where do individuals, as you described it ever so well, we live in incredibly volatile times, where do individuals look to park their money, A, to be safe, and B, possibly even to earn $1 or $2?
Well, I think they have to diversify, A, in different asset classes, and obviously also to have assets in different sovereign nations, in other words, in different jurisdictions, so not to have all the assets in one country would be a big mistake. To have some assets, say, from Canada, some maybe in Europe, some maybe in the US. I wouldn't choose the US, but other people might, and some in Australia and some in Asia. So that is a very important consideration. And I would say nobody knows for sure. Based on history, it's very clear that the richest people are not the ones that owned government bonds in the long run, nor the ones that owned cash, but people that owned real estate or paintings, art, or they owned equities, or they owned their own businesses and so forth, or mines, mining wells, or oil wells and so forth. So I would say someone would have to consider, in the worst case, say, everything collapses. Where are you better off? In equities, real estate, or are you better off in cash that can go poof and be worthless? So I would say if you have a position in real estate that is not leveraged, if the whole thing collapses, you still have your house.
Right.
You understand? Shares, if you own, I don't know, Johnson & Johnson or Microsoft or whoever it is, Intel, they may go down 80% in value, but they don't become zero if the companies are okay. And I would also have shares, especially in Asia, where I have most of my money, is in Asian shares, not US shares, because I think that we had, say, in Thailand, almost a civil war this year.
Yes, yes.
And for 2 months, the economy slowed down meaningfully. But this year, the best performing markets in Asia are Indonesia, up 20%, Thailand is up 14%, Philippines up 10%. So, you know, you can have very bad conditions and the markets still go up, surprisingly. That's why I think that investors have to always think two ways. Yes, for instance, myself, I think the whole world will collapse and we are all doomed. But in this very negative appraisal of the world and forecast, I have to think through where is it best for me to be positioned in government bonds or cash or in precious metals and equities. And for me, precious metals and equities is probably the more desirable option.
Well, it wouldn't have been a good conversation with Marc Faber if we didn't hear a moment or two of Dr. Doom.
Thank you.
Thank you for joining us,
Yes,
sir.
my
It's been a
pleasure.
real pleasure to
Yes,
see you
equally.
again.
Thank you.
And we'll be right back.
Good afternoon. My name is Larry Ray. I'm the chairman and CEO of Molycorp Gold Corp. As the name states, we do have a deposit we're developing in British Columbia, which is a pure molybdenum deposit. But our focus these days is on magnesium in Nevada. Through serendipity, we discovered a large deposit of magnesium running about 10% with a high purity and consists of about 256 million tonnes at this time, 52 billion pounds. Our main emphasis is to move this project forward by beginning a drill program later this year in which we can increase the integrity of the resources into the indicated and inferred, as well as increase the resource itself. For further information, please visit our website at molycorp.com or phone us at 604-531-9639.
Tax Tips with David Ingram.
There's the dividend tax credit you may be missing. All sorts of people arrange to put dividends and other investment income into their spouse's name. Spouse has no other income, and because they've got dividends in the spouse's name, you've lost your spouse as a dependent. But you can get your spouse back as a dependent and get that dividend tax credit on your tax return by reporting your spouse's dividends on your return and thereby reducing her income by that amount. You claim her as a dependent or him as a dependent, and you get the dividend tax credit. It's good tax planning. That's a tax tip from David Ingram.
Tax Tips with David Ingram.
Do you want to save yourself a $2,500 penalty? Well, it's actually $25 a day to a maximum of 100 days. But Revenue Canada has a form called T1135. You've got to fill the T1135 in if you have foreign investments. Now, foreign investments don't refer to a summer cabin that you only stay there yourself. Foreign investments do refer to a summer cabin that you rent out to somebody else. Foreign investments even refer to foreign stock that you hold in an account with a Canadian stockbroker. So you take a look. If you've got any foreign investments that are returning your income, you make sure you go look at Form T1135. It's important. The penalty is $2,500 for not filling it out. Tax office is issuing penalties. That's a tax tip from David Ingram.
And that's our program for this week. Our thanks to David Ingram and to our special guest, Dr. Doom, Marc Faber. And thank you for joining us. If you have some thoughts about today's show that you'd like to share with us, please send them along to comments@themoneyandwealthshow.com. I'm Sterling Fox. See you next time.
Comments made on the preceding paid commercial program are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time.